We'll be looking at professional ethics and code of conduct. Professional ethics and code of conduct. And today's class promises to be interesting. So I want you to pay attention and listen carefully. If you have any question, let me know. If you need any clarity on anything, just let me know. I'm here for you. So let's start fully. Today's topic is professional ethics and code of conduct. And when we say professional ethics, what do we mean? When we say code of conduct, what comes to mind? Now, before I go on, last class that I took, we discussed about the meaning of audit and assurance, the need and the concept of audit. Why do we need audit? Why is it important that audit should be carried out for companies? We also discussed about the accountability concept, the principle of agency, stewardship principle, and that due to the structures of company, the of large companies now, most times owners of companies are different from those managing the company. And because of this, the owners want assurance over what the management have been doing. And that's why we have audit and auditors. Now, today we want to look at what are the expectations from audit. If I have a business and I'm calling an auditor to come and carry out the audit work, the auditor must be somebody that I believe will be able to do the work, and the auditor must be professional. So because of that, there are ethics that guides the profession of auditors. And just like every organizations, every entity have their code of conduct, the audit profession as well has its code of conduct, such that this code of conduct guides the practice and the behavior of auditors. Now, the thing is, bef- before I go fully into the class, let me just give you, if you have your notes, you can just jot down. Let me give you an overview of today's class so that we'll have more like a guide to what we're doing today. Because I want us to stay within the lines of the class. So just let me know if my screen is still showing. If not, just let me know. So the overview of today's class is that we will be looking at professional ethics and code of conduct. And under that, we will look at what are the types of ethical codes that we have. Are there different types, or what branches of ethic codes apply to the accounting and audit profession? Then we'll also look at five fundamental principles of ethics. So don't forget, I expect you to be writing this down. We'll look at the two types of ethics, which is principle-based ethics and rules-based ethics. We'll also look at the five fundamental principles of ethics. And from there, we'll look at the key areas under the code of conduct of HICAN, the key areas where attention should be paid to. And under that, we'll look at independence, objectivity, integrity, confidentiality, and conflict of interest. Then we'll also look at what are those things that will threaten the independence of the auditor. Don't forget, the auditor is supposed to be an independent person. So we'll look at threats to independence. Then we'll look at categories of threats. What are the different areas that this threat can manifest? Then we also looked at how do you protect or guard against this threat, and that is safeguards and procedure to threat. And lastly, we look at ethical conflict resolution. So these are the areas we will look at today. I will share the material on the WhatsApp group so that if you can follow as we go together. Let me just drop it on the WhatsApp group. Just let me know once you have it on the WhatsApp group. You can just drop a message in the chat that, oh, same. So today's topic, professional ethics. So hold on. I'm trying to put it on the group so that you can follow me as I teach. Okay. Okay. So I just dropped the material on the group. So let me know in the chat if you've seen the material before we go on. Or you can just unmute and tell me seen. Have you seen the material on the WhatsApp group? Anybody? Okay. Okay. While we wait for
Yes,
that.
sir. We see.
Okay. Okay. So
Already
like
see
I
it.
s- oh good, good. That's good. So like I said, we'll be looking at professional ethics and code of conduct. And we have two major type of ethical code for accountant. Now, these two major ethical codes are the codes that any account professional body can apply to regulate the behaviors of accountant. We have number one, what we call rules-based ethics code. Rules-based ethics code or rules-based ethical code, whichever way you want to write it. Then the second one is principle-based ethic codes. Now, what are the differences or what do we mean when we say rules-based ethical code? Just like the word say rule. If I ask now, who can define what a rule is? Most people, there will be different definition across, but a rule simply means like a law, a guide that, oh, you have to do this, you don't have to do this. So anytime you hear rule-based ethical code, it means that there are different rules that have been put in place, specific rules on how accountants or auditors should behave in certain situations. So, for instance, if an accountant or an auditor is supposed to carry out a work for a particular firm or a particular company, there are rules that specify that this is what you should do when you are faced with this situation. Very definite rule. So because the rules are such that you don't have to think so much, it just tell you you are in this particular situation, do this. Let me give you an instance. If you are married and you have children, and you tell your kids that when you come back from school in the afternoon, just go to the fridge, pick maybe a cup of just take a cup of milk and drink, and don't take soda or don't take Coca-Cola, just take a cup of milk. So anytime you want to drink, don't take soda, just drink milk. That's the rule. But if you tell your kids that, oh, when you come back from school, anytime you feel like drinking, just go to the fridge and pick anything. Now you've given the first one is a rule in the sense that you can only take a cup of milk from the fridge or drink milk from the fridge. You can't take any other drink. But the other one that I just give it blank, like take any drink you want. Now that's a layman definition or a layman explanation of what the principle base and the rules base is. The rule based ethics are saying that anytime an accountant is in this particular situation, this is what is expected for the accountant to do. Now, if you look at that and you look at the principle base is more like giving room for the accountant on how to behave. It's just like a guide. Very is not definite. It just say that, oh, this is what how you can apply this principle, or when you are faced with this situation, just use this principle. You don't have to be, they won't tell you specifically. So the accountant will now need to use the principle and apply it. But for the rule, the accountant might not need to think and will just apply the rule. Now, if I may ask, and I want response from the class so that we know that we are together. If I may ask anybody, which one do you think is preferable, or which one will you say will be more effective? I want response from the group.
Really sorry.
Okay, I can't hear you clearly. Who is speaking here? Can you be louder? Or you want me to call names? Okay. Quickly, please, can anyone just tell me if you look at the rules and the principle, we said the rules are specific rules that accountants should apply in a specific situation. While the principle base give room for maneuver, it just gives you more like a general guide on how you apply. And I'm asking a question that between the two, which one do you think is more will be more advantageous, or which one do you see as more uh, that suits the profession more? Kelechi, can you give us your thought
The
on that?
principle based.
The
Okay,
principle
mine is the
base,
principle based ethical.
the principle base. That's good. Any other opinion between the principle base and the rules base? Sunday, you are saying
For
something.
me,
Okay.
Yes.
I think we should it'd be best if we run a structure where we have both rules and principle based framework, because each of them has their advantage and their disadvantages. You
Very good. I
understand?
like that. I like that. That's the nice one. Oluwa Pelumi. Yeah,
Yes,
Sunday,
please.
you wanted to say something. Can we hear you?
Yes, actually. So I will also go with the principle base.
Okay.
Looking at it, that the rules you have to just follow some specific state guidelines. Do this,
Okay.
do that, do this. But the principle base will allow you some allowance to make some things that you need to do. So that's
Oh,
why I
that.
would.
Oh, that's very good. That's very good. Actually, we've all spoken well and we've answered well. And if you listen to what Belumi said he would have preferred a situation where there is a mixture of both, such that you apply the advantage of this one over the disadvantage of the other. That's fine. That's fine. Now, the thing is, before we will say, principle base is the best, or rule base is the best, or we should apply the two. Let's look at the disadvantages of each, or let's look at why. Because the thing is that most professional bodies, meaning including ICANN and even the International Federation of Accountants that regulates accounting profession all over the world. You know, when we are saying accountant, we're also referring to audit. Audit is a branch of accounting. So don't think that we've dropped audit under this topic. All the things I'm saying here, anytime I mention accountant, it also applies to auditors. Now, most professional body, including ICANN, have imbibed the principle based codes, ethical codes for regulations of their professionals. And the reason is not because the rule base they just don't like it or they just don't want to do it. The reason is primarily because of the inherent disadvantages of the rule base. And what are these disadvantages? The disadvantage is that number one, there are different situations that accountants will face in the course of their work, such that they will face many situations that will require ethical decisions. These situations, you can't list them all. You can't have a situation where you document the different situations that accountants will face in the course of their professional work. Now, if we now say the rule base is saying that these are specific rules for how accountants should behave in a particular situation. Number one, it means that the rule base is already limited, because there is no how you can preempt or have an idea of all the situations that accountants will face. And the fact that they will face so many different situations, there will be some that will be complex, there will be some that will be different and based upon different work they do. So that's the first disadvantage the rule-based post, such that you cannot list out all these different situations accountant will face. And as such, you can't have rules for this. If you don't know that this particular situation will be happening, how will you provide a rules to act when the situation happens? So you can see that that's already a disadvantage. Now, the second reason why most professional bodies, ICANN as a professional body, accounting professional body, now go with the principle base. The second one is that it is very, the rule base doesn't allow for maneuver. It's so rigid, such that if an accountant is facing an ethical situation and the rules cannot provide enough solution, it means that you are not giving the accountant room to solve the problem. Once he applies the rule and the rule cannot solve the problem, what happens? The accountant is stuck. So that's another reason why the rule base is not being adopted by many professional bodies. But if you look at the principle base, what happened with the principle base is that it specifies general principles that accountants can apply for various situations they will face. General principle of ethical behavior are specified for the accountant, such that the accountant is required to use his judgment in each case depending on how the case presents itself, and the accountant can determine a proper and ethical way for that situation. And that's why the principle base is being adopted by IFAC, International Federation of Accountants, ICANN itself, and so many other professional bodies around the world. So it's not that they don't want to adopt the rule base, but because of the limiting nature of the rule base, that's why many professional bodies adopted the principle based ethical code. Are we together? Now let's look at what is this principle based ethical code? What are they about? What are these principles? What are those principles that these general principles that accountants are supposed to apply in the course of their work to guide them? Now, this part we're going is a very, very key part that you must not only know, you must also be able to write extensively about them, talk about them, and apply them in your professional relationship, professional um um, business. Now, the thing is, this particular aspect is so common that I kind of tested it over and over and over, and we cannot say they will still test it. So, I want you to pay attention. Now, this principle based ethics has five fundamental principle rather. These five fundamental principles are the core of those principle based ethics that we've been discussing. And what are these five fundamental principles? Now, the first principle in these five fundamental principles is integrity. Integrity. Now, what does that mean? It means that as an accountant, as an auditor, and as a practitioner, you are expected to be straightforward and honest in all your professional and business dealings. What do we mean? That as an accountant, you don't say what is not, you are not dishonest in your business dealing, you are not cooking figures, and you are not doctoring numbers or doctoring document. As an auditor, you are straightforward, you are not cunning, you are honest. When you see an issue, you report it the way it is. It's very key. So you are a student of ICANN, you are preparing to be chartered. After this skill level, you move to professional level, and by God's grace, you get chartered and qualify. Now, this principle also applies to you as a student of ICANN. The moment you register that you want to be a chartered accountant, this code of conduct guides every person having who is in contact with ICANN, whether as a student member, as a qualified member, as a staff of ICANN. So it means that you are expected to display integrity in your dealings. I hope that is clear. Now you need to know this and you need to be able to write it. In an exam, the examiner will not ask you directly that what are five fundamental principles. The examiner will paint a scenario and ask you that what principle did the accountant apply in such scenarios or in the case study. So that's the first fundamental principle. Now, The first leads to the second one, objectivity. When we say objectivity, what we are saying here is that a professional accountant, an auditor, or a practitioner is expected to be objective, meaning that you are not supposed to allow bias, sentiment, conflict of interest, or unnecessary influence of others to override your professional judgment. So you know, I said the first leads to the second. If you are not objective, you won't be honest. And if you are honest and straightforward, you will be objective. But what will make a professional not to be objective is when you've seen the truth, this is the figure, this is what the account is saying. Just because of conflict of interest, maybe you know somebody in the business, or you are working for your boss has told you that if you don't make the numbers to balance at all costs, your job is on the line. No, you should not allow undue influence of others or bias. Oh, maybe you've been promised a bonus that if you can turn in the report in 2 days time, and you know that this report, for you to do it in 2 days time, you means that it's not possible, but you just want to cook up something. So it's not allowed. So the principle is saying that whatever situation an accountant or a professional is faced with, your objectivity must be sound. Whatever situation an accountant or an auditor is faced with, you must be straightforward. You must be honest in all your professional and business dealing. And that leads us to the third fundamental principle in the code. And the third is what is called professional competence and due care. Professional competence and due care. Now, what this is saying is that now you are studying to be a chartered accountant, you are at the skill level. Once you finish the skill level and pass, you move to the professional and you qualify. That's not the end of the journey. That you are a chartered accountant doesn't mean you should go and sit down. What it only means is that now you have to start upping your game, up your skill, develop your professional competence to the point that when you are called upon to do anything, you won't say, I don't know it. Let me shock you. The moment you qualify, if you work in an organization where they value chartered accountant, the moment you qualify, you will find out that every issues around accounting, people will be coming to you to ask for solutions, both what you know and what you don't know. Now, don't forget, we say you have to be straightforward and honest. But at the same time, if you don't know something, it is expected as an accountant that you need to develop professional skill such that if you're an accountant, by the time you've been 5 years as a chartered accountant, you will have grown your level of expertise. So, what professional competence and due care is saying that as a member, as a chartered accountant, as a professional, you have a duty to maintain your professional knowledge at a level that client or employer will get competent services. So if you are working and you are a professional, you are not supposed to say, I don't know this, especially when it's an area that you should know. You are a tax, take for instance, you are a tax official, how would I say, a tax expert, and you are saying that you don't know anything about the tax reform. No, you have to develop your knowledge up to scale and in tangent with current realities. That is a principle that is expected from every professional. If you are a finance professional, you're supposed to know what latest standard is taking place, when it will start. Your IFRS is not just for the books that, oh, I'm not chartered, I should go and keep it. No, you need to know. Even you need to develop knowledge in related areas. And that's what we mean by due care. Members should act diligently. And due care also means that you should behave and apply appropriate knowledge to solutions. Okay, you've been given an account, a book of records to prepare an account or a statement of account. You should prepare it in line with professional standard. You are an auditor. You should apply the appropriate auditing standard to the audit. You are a tax professional. You should know what statutory deductions you are supposed to do, the appropriate time for filing, and all of that. So, what it simply means when we talk of professional competence and due care is that you should develop your skills appropriately. That's the principle. Because when you do that, you'll be able to do your work with objectivity. When people are not honest, sometimes it's because they don't have the required understanding of what they are supposed to do, or they don't know. Sometimes when people are also not they are not being objective, is because they don't know, they've not developed themselves. If you know what you're supposed to do, you have proper understanding of it, nobody will be influencing you anyhow. That's what we mean when we say professional competence and due care. Now, the fourth fundamental principle under the principle-based ethics code, which is what ICANN has adopted for regulations of professional under their jurisdiction, is confidentiality. Confidentiality. Now, last week we discussed, oh, not last week, the week before last week, that's the topic I took you guys, the concept and the need for audit. I explained then that the reason why we need auditors is because the ownership structure of large companies, owners are different from the management. Now, auditors are coming to come and audit, look at the financial statement and express opinion on it, whether it shows a true and fair view. Now, for auditors and professionals, accountants and inclusive, to do their work, most time, and even in all cases, they will come in contact with informations that are peculiar to the client. These informations are sensitive and confidential information that auditors and professionals like accountants will come in contact with. The reason they have this information is not because the client just want to give them. It's because of the work we do as an accountant and as an auditor. So what confidentiality is saying that you should respect those information, the confidentiality of those information. You are not supposed to disclose such information to third party without appropriate approval. You are not supposed to use those information for your own personal advantage. You are not supposed, maybe you are auditing a bank or you are auditing a business and you discover that this bank, their shares will soon increase, and as such, people who have shares in this company will benefit, and you leak such information to maybe a family member or you yourself use it to trade. That is not allowed. Confidentiality means that you keep information that you've come in contact with, you keep them and guard them jealously. You don't use them for your own personal advantage, or you disclose them to third party without authority. However, there are situations where you might need to disclose such information. Now, if I may ask, and I want answers, my class, you always hear my voice and I always hear your voice. And if I call your name, don't log off. Oh. It's because I want you to understand better. So, Adeswa, I've just explained confidentiality, and I said that is about keeping the information that you've come in contact with and not disclosing them to third party or using them for personal advantage. Now the question is, and I said, however, there are some information that you might need to disclose. So if I may ask, what information do you think you might need to disclose if you come in contact with them? Adesha, are you there?
Sir,
Okay, did you hear the question I asked?
say it again, sir, please.
Okay, I should repeat the question again.
Yes, sir.
Okay, I do you get my explanation of confidentiality?
Yes, sir.
Okay, so I now ask, I put a caveat that, however, there are some informations you might need to disclose in the course of when you come in contact with such informations, you might need to disclose it. I said, what are those information? What do you, just in your own thoughts, just
Ah, okay. Sometimes the information we get is because of the privilege. Okay,
okay,
but it doesn't mean that we have an authority or we have a this one to I mean to voice it out or like this thing. So we need
okay,
as an auditor at least if you see that the information is you need to study first the impact of this
okay,
information. If you leak out this thing, what will be the
uh-huh,
impact? Or there's a
okay,
proper forum or maybe the proper person to discuss with this one like this.
okay, okay. Thank you, Alexa. Thank you, Alexa. Now,
Yeah.
at this one now, Alexa have just said that you might need to look at the impact before disclosing. That's Alexa. Now, at this one, what can you say to the question? Are you with us? Okay, now go ahead. What information uh, you should you can disclose that overrides the confidentiality clause? Okay, why are these tries coming up? Can anybody try? What are those information that when you come in contact with them, you might need to disclose them, even if the client doesn't want you to disclose?
I think one of those information could be, I mean, anything that is required by law.
Okay, Regina, anything. That's a nice one. You know, he has just said that anything that is required by law. There are situations that the law will, maybe the client has been involved in a case or whatever, and the auditor is summoned to come to the court of law. Now, you might need to disclose the such information. So don't let's jump the gun. We will still get there and look at what are those information. I just want to throw it out there so that you start thinking about it. One other
Yeah.
information before we go. Hello.
Yeah.
Yes, I'm listening. Do you have anything to say?
Um, even though there's like with regards to that one, it's
Mm.
maybe it's better for the auditor to at least withdraw the engagement in case that
Oh,
this one will happen.
okay, okay. We'll get there when auditors might need to withdraw from the engagement if we will look at that. Don't worry, we'll look at that. But
Mm.
however, there are some information that the auditor is required by law to disclose. One of such is issues of money laundering. Issues of money laundering. When an auditor or an accountant is being engaged by a client to do audit work and the auditor finds out that this client is involved in proceeds of money laundering or this client is involved in issues of illegality such as terrorism financing, such as tax evasions. Now, these are issues that the law says the auditor must disclose. The confidentiality clause is being override by issues of money laundering, terrorism financing. There is no more confidentiality when it's a case of illegality such as money laundering, terrorism financing, and the likes. So the auditor has to disclose such. Or however, there are ways the auditors will go about disclosing it because it might also pose a threat to life. We'll get there. Now, that's just the fourth fundamental principle. Don't forget, I said there are five fundamental principles that is in the principle-based ethic codes. The first one is integrity, which says that uh, as a professional, be it an accountant or an auditor, you are expected to be straightforward and honest in all professional dealings. So there is no question of covering up or not being truthful or being playing double standard in your work. No, The other one is objectivity. You're not supposed to allow undue influence of others, intimidation, conflict of interest, or your personal bias to override your professional judgment. You're supposed to report it at the way it is. You're not supposed to be sympathetic to the client's cause. Ah, and I like this client too. If I give this report now, these clients will lose money, investors will not come in, he won't get the loan he wants to get. No, you have to be objective. Then the third one is professional competence and due care, which means that as a professional, you have to develop your professional knowledge such that you can deliver competent services. You have to develop it. You have to keep in touch with current development. You have to know what is happening in the profession. You also have to know how to apply the standards and professional standard to your work. That means you're not supposed to be carrying the accounting knowledge of years ago. You know, accounting is evolving. The world at large is evolving. Technology is turning things around. There is AI, there is ChatGPT. A lot of things are happening, even in the accounting profession. So, as an accountant, it means that you need to evolve along. Now, if you don't do that, you will be obsolete and your service might not be required. So this principle says that accountants are supposed to be evolving with current trend. If there is a new innovation in how the accounting standard is being reported, just years ago, there is nothing like IFRS. About 15, 20 years ago, no IFRS. It was strictly IAS. And when IFRS came on board, we started having IFRS from IFRS 15 1, and now there is IFRS 17. IFRS 18 is coming up. IAS 1 is being readjusted and all of that. You're supposed to know what is happening. Not that, oh, I'm not a chartered accountant, you go and sit down. You're supposed to develop your knowledge. That's what professional competence and due care is saying. And confidentiality. The fact that professionals, accountants, and auditors inclusive, come in contact with clients' information, business informations of the client, does not mean they should disclose it. We said that accountants, auditors, and to respect the confidentiality of the information they come in contact with. And they are not supposed to use this information for personal gain, nor disclose it to any third party without authority. However, there are some information that is required by the law to disclose. We said that those information they might need to seek authority, the approval for it, and that there are some information also that they need to disclose, information that is bordering on illegality such as money laundering and terrorism financing and the like. Now, the last fundamental principle under the principle-based ethics is professional behavior. Now, what do we mean by professional behavior? It means that as a professional, an accountant, an auditor, you are not supposed to behave in any way that will put the profession in disrepute, meaning that you're not supposed to discredit the profession by your behavior. You are supposed to comply with relevant law and avoid anything that will bring reputational damage to the profession. You are supposed to behave with courtesy and consideration to everybody when you are doing your work. So it means that as an accountant, there is an expected behavior. You're not supposed to be seen like that somebody will not saying accountant they are thieves, or auditors they are just collecting money. That auditors don't do anything. That auditors are lazy people. Auditors are just whiling away the time. No, you are not supposed to behave in a way that people would disregard the profession. So that's what professional behavior is saying. And these five fundamental principles forms the tenet of the principle-based ethical code. You, as an accountant, you're supposed to apply them in your professional dealings. Now, if I by next class or any, you're supposed to have known all of these five fundamental principles. They are easy to remember. Number one, integrity. Number two, objectivity. Number three, professional competence and due care. Four, confidentiality. And five, professional behavior. Now, all of these 5 principles is what is contained in the ICANN Code of Conduct that guides the behavior of accountants in Nigeria. But there are areas where key attentions are being paid to by ICANN. And the reason is that if you look at these key areas, these are the areas where there are usually issues. Now, those key areas are where serious attention should be paid to by the professional. Like we said, principle-based ethic is just like a general guide. Oh, this is how you should just apply this principle in this situation. It's not telling you strictly like the rule base that do this. It's just say apply this. Now, what are those areas that usually pose challenges that accountant needs to pay more attention? And that's what we want to look at. And these areas, they are also from the 5 fundamental principles based on the integrity, objectivity, confidentiality, and all of that. These next 5 key areas are areas that you will find issues that accountants will face in the course of their work. The number one area is independence. It is expected that accountant and auditor rather should be independent in the course of their work. They should not be influenced. If you are not independent, it means that you can't be objective. If you are being influenced, you can't be objective. If people believe that you are working for that your opinion is as your opinion is not a thorough opinion, or there are elements of doubt around your opinion, it means your independence is being threatened. If you are seeing that these auditors, they are paddy paddy. When I say paddy paddy, what we mean is that they are just friends with shareholder or friends with management. It means your independence is threatened. And once you are seen not to be independent, there is no objectivity that can come out of it. And if you are not objective, it means that your integrity is at question, will be questioned. Now, those areas are where I can have also put extra measures or extra points for the accountant to pay attention to. The areas of confidentiality, like I said, what are those areas that the confidentiality clause is being override, and how should professionals apply, what are they supposed to do when they have issues around confidentiality? We also look at conflict of interest. What do we mean when we say conflict of interest? Now, when we talk about independence, there are 2 major areas of independence when it comes to audit, or when it comes to this principle base. The first one is independence of mind, and the second one is independence in appearance. Now, if I may ask, independence of mind is when you are actually independent. That means you are not being influenced. What you are doing is you are doing it from your own professional judgment. There is no outside influence, there is no coercion. It's You are expressing your own mind, free mind. That's actually what independence of mind is saying. The state of mind that permits you to express your opinion without influence of any other. You are being objective. Now, this is what the auditor should strive to do in all their work. They should display independence of mind. Now, the second one is independence in appearance. Now, what do we mean by independence in appearance? You know, you can be independent of mind, meaning that you are expressing your independence. There is no undue influence from anybody. You are expressing your opinion. You are acting with integrity. You are being objective and all of that. But if there are situations where, let me first paint a situation for you, and I want us to respond accordingly. Let's say, I hope we are listening. Let's say you are the auditor to a certain client, ABC. ABC company has engaged your service as an auditor, and you are supposed to be the senior audit partner for that engagement, meaning that you are the audit partner for the engagement. You have your team of auditors that you'll be working with, but you are the lead engagement partner. Now, when your firm, the audit firm, let's say your firm is XYZ and chartered and chartered accountant and co. They've gotten the engagement letter has been signed and all of that. And you are the lead engagement partner. When you get to the company, the ABC company, you now discover that the MD is a childhood friend that both of you went to school together. You went to school together and you were good friends. You even went probably to high school together. And the moment you get to the client's office, old memories, both of you, and how is everything? Now, you are the lead engagement partner. You now carry out the audit. You're not influenced by your old friends. You did your work, and the report was that the opinion being passed is that the client financial statement is prepared with applicable framework. The financial statement show a true and fair view, and there is no reason to qualify the financial statement. But some other people were saying no, it's a lie. No, it's a lie. Why do you think they are saying it's a lie? They will say it's a lie because they know that ah you were friends with the MD in the past. You guys were good friends, and probably when you show up on the client side, they saw the catching up. Or it's possible for some persons to say, this audit is being influenced by MD because the MD knows the engagement partner. So what we are saying when we talk about independence in appearance is that the auditor, there must be avoidance of fact and circumstances. Now I'm reading from the text. There must be avoidance of fact or circumstances that are so significant that a reasonable informed third party will, having all knowledge of relevant information, will not conclude that the auditor's team integrity has been compromised. What we are saying is that when a third party looks at the auditor and looks at what the auditor is doing, that third party will not be able to say that this auditor's independence has been compromised, because the fact that the auditors the third party knows that the MD is friends with the lead partner, he can start saying the independence is not there. So the auditor should strive to have independence of mind and also independence in appearance. It is very important that the auditor should not just be, I'm independent, I'm doing my work, I'm not being influenced by any other person. Is he being seen to be independent? That's what independence in appearance is saying. There could also be situation where maybe on the board of director, the auditor has a wife or a family member on the board of director. Once that has happened, it means that independence in minds will happen. Because what we are saying in independence in appearance is that there should not be any situation that an onlooker will be able to say that, this auditor is not doing a thorough job. Why would they say he's not doing a thorough job when they know that there is somebody who is familiar with the auditor in the company? So that's what we're saying here. And to guard against these two, independence of mind and independence of appearance, I can now have some rule independent, despite the without some rules, so that it will be able to guide the auditors and ensure the independence of the auditor. Any questions so far before I go on? If you have questions, you can write on the group, on the chat rather, and let me know, or you just quickly unmute. If not, if there are no questions, let's now look at those rules that I kind of put together on independence. The reason for all these rules on independence is to ensure that the independence of the auditor, both of mind and appearance, is intact. You need to understand the independence of mind. How is very important. It's important that the auditor is not being influenced. How is the independent in appearance important? It's important that there is no situation or circumstances that will give a third party, somebody like an onlooker, any ideas that the auditor has not applied his professional skepticism or judgment to the fullest, or that it has been compromised. And that's why I can have the following rules on independence. The first rule that ICANN has put in place to ensure the independence of mind and independence of appearance for the auditors and the accountant and all members is that all members are advised to discharge their duties with integrity and objectivity. Now, once you are doing your work with you are being straightforward and honest in your work, and you are not allowing undue influences, what you are doing invariably is that you are ensuring your independence of mind. So the first one address independence of mind. As a member, you should not allow your name to be associated with a document, report, or financial statement that is misleading. So you are an accountant in your office, a financial statement has been prepared, and you are aware that that financial statement has been window dressed. In quotes, window dress means that the figures on the financial statement are not true, or they are biased or misleading. You are not supposed to be part of it. You should not allow your name. That's why you see chartered accountant, they don't just sign anyhow. The reason is because you want to be independent. You don't want to be an accountant that has been influenced. You want to ensure that your independent count. You see, all these principles, the five fundamental principles, is to also ensure that the the profession of accounting and audit is not put into a bad light. And that's why it's very important for professionals to behave accordingly. Now, the second rules that ICANN has stated on independence is that as an auditor now, you are not supposed to hold beneficial interest in the equity of a client's company. What are we saying here? That you are not supposed to have investment in be part of the owner of a client company that you are auditing. So I'm an auditor to A, B, and C, but I also am part of the equity owner of that company. That is not allowed. And what is that trying to do? It's also to ensure that as an auditor, independence in appearance is secure. So there is an error in the text. The first one A, the second one should be B. So if just note it, if you have this your computer pen, you can correct it, or when you print the material, if you can, just note that the first one is A, the second one is also not A, is B. So it's A B, just like that. So the B part, which is written as ATA, is saying that auditors should not hold beneficial interest in the equity of a client's company, meaning you are not supposed to be shareholder of a client you are auditing. The reason this will address the issue of independence in appearance, because you might say that I'm being objective, I'm straightforward, I'm doing my work with all professional competence. Are you seen to be independent? Because once you have an equity, you are you have a beneficial interest, or you are an equity owner of a client and you are the auditor. How would that be seen? So that's what that part is saying. Then the other rules that address this, which we can also discuss or you look at, is that as an auditor, you should not accept fee or amount which is dependent on the sources of the assignment. What does this mean? What are we saying here? That the money you are being paid for the audit fee should not be subjected to okay, we will only pay you this audit fee if the report is that, or the opinion is that the financial assessment shows a true and fair view. That if the financial statement says otherwise, we will not pay you. That engagement should not be taken up. That's what that part is saying. That you are not supposed to accept an engagement where the success of the assignment is dependent on the fee. That's what that part is saying. Then, as an auditor, you are not supposed to act for the client in an executive capacity. What are we saying here? You can't be the auditor and also be part of the executive management. You can't be the auditor and also be the HR for the client. You can't be the auditor and also be the one preparing the tax for the client. You can't act as an executive management or in executive capacity for the client. You would rather be a consultant and not the auditor to the client. The reason is this will ensure independence. Are we together? Is there any question so far? Please let me know if there is any question or you need further clarity. But I hope we are getting it. That this rule speaks to independence. ICANN wants to ensure that auditors have independence of mind and independence in appearance. Because if one is threatened, what I mean by if one is threatened, once an auditor is seen not to be independent, whether of mind or in appearance, there is no how his opinion will count. So this rule speaks to how to ensure the independence of the auditor. We've said it. The first one is that you're supposed to discharge your duty with integrity and objectivity. You should not hold any beneficial interest in the equity of the client. That is, you should not be a shareholder, you should not be an investor that is receiving dividend, and you should not accept a fee that is dependent on the success of the assignment. So this is like a clause. The client is telling you that for me to pay you, or I'm paying you this money so that you give me an opinion that I want. No, that kind of assignment will not ensure independence. And we also said that as an auditor, you're also acting in the executive capacity for the client. So this and many more are what ICANN has put in place to ensure the independence of the auditor. Now you need to know all of this so that when you are in exam, that's why I'm taking my time to read it out to you and explain that when you understand it, you'll be able to write it in an exam. The other thing is that as an auditor, you are also not to act for two opposing clients in the course of negotiation, settlement, or claim unless you have been appointed so by the authority. What are we saying here? You're not supposed to act for two opposing clients, whether as an accountant, oh, you are doing work for this, preparing, being the auditor for this, and you know that this client is is like a rival to the other client. You don't put yourself in the middle as an accountant, as an auditor, unless or if it's you are being appointed to by a regulator arbitrator. What an arbitrator means is that you are standing in as a mediator, and it's only by law that you can do that. But just on your own, acting for two opposing clients, no, because you will be seen to be biased for one. That's why ICANN has stated one of its rules that you are not supposed to act as opposing client. Now, if you look at all this rule we are saying, if you remember at the beginning of the class, I think it was one of the students said that he would have preferred a mixture of the two. Actually, what ICANN has done is to apply part of the rule base for this principle of independence. Even though we're saying principle base give you a guide, I can apply the rule base for how you should ensure your independence. So it's stating out different situations to ensure your independence. They might seem broad, but if you look at these rules, they are kind of specific. And that's what I can say, using a mixture of the two. Now, one other rules on independence that we must also notice that as an auditor, you are not supposed to give or receive from a client a loan or financial guarantee. What we are saying here is that you're not supposed to give loan to the client nor take loan from the client. Now, why is this important? If you take loan from a client and you are also the one doing the auditor can say, oh, instead of paying you, let me take the loan as your audit fee. That will just impair the objectivity, and it can also create independence in appearance because people will say, it's because you take loan from the client. That's why your report is such and such. So you're not supposed to take loan nor give loan to the client. Then the other thing is that you are not supposed to ask for an audit for a company where you are also a receiver. So a professional or an auditor should not be the auditor for a company where he's acting as a receiver. Now, what do we mean when we say a receiver? Now, when companies are winding down or a company is about to be liquidated, you know that the company is being run by management who are holding trust or who are acting in the interest of the shareholder. So sometimes a company has collected loan or shareholders have approved that loans should be used for the running of the business. Now, when a company is about to go down, they need to pay back the loans they've collected. So what happens is that a receiver is like an administrator that will come to oversee the affair of a company that is going down to ensure that the loans that they've taken is being paid back to the owners. So if a company has collected loan from a bank and the company is about to go down, a receiver will come in, usually appointed by either government or the people who owns the loan, to see that all the asset that the remaining asset can be can be utilized to pay back the loan. So you know that professional accountant, we have understanding on how a business is structured, we have understanding on how to value a business or value a company. That's what your SFM and PM will teach you. Valuation of a company. When a company is winding down, how do you prepare the financial statement? You prepare it on breakup basis. So a company, an accountant has all those knowledge. So you are an accountant, and if you're also an auditor, you are expected to have this knowledge. And that's what the principle of professional competence and due care is saying, that you are supposed to develop your knowledge. Now, having developed your knowledge to an extent that you can act as a receiver, once you're acting as a receiver for a company, you can't also act for the as an auditor for that company. And if you are acting as the auditor, you should not act as a receiver so that there is no conflict of interest or there is no independence in appearance issue. You see why ICANN has decided to state all this rule to remove ambiguity in what the auditor should do. Then there are other rules that you can also read. Is one of the rules is that the auditor should not derive too great proportion of his annual recurring fee from a client. What we are saying here is that auditors have different clients that they have engagement with. You can have maybe three major clients. Some can even have 30 depending on the audit firm. Take for instance the big four. Some of the big four, they have as many clients as possible. Now what this rule is saying is that no sing no single client should be the major financier of the audit firm, such that the client is the one paying over 25% of the income of the audit firm. So the auditor should not derive too great proportion of his annual recurring fee from a single client. So once it's over 25%, it's substantial. So what this is saying is that a single client should not be the one financing the audit firm. The reason this is so is that so that the client will not be able to influence, or the auditor will not be at the mercy of the client. That's what that point is saying. And that's very important. Any question before we go on? If there is no question, I have my own question. So just know that my question is coming. Now, quickly,
Yes,
let's look
sir.
at. Okay, is there a question?
Yes, there's a question, sir. Good evening, sir.
Okay, go ahead, Samuel. I'm listening.
As regards the opposition company, whereby it's talking about the rules of, I think it's
I can't
speaking
hear you
that
clearly.
about the opposition company being an auditor for
Okay,
two of
opposing
the
client.
opposing clients. So,
Yeah.
what if what if the auditor is not aware for the fact that this client
These
are
clients are in opposition.
so? What about in that situation?
Okay, I get what you're saying. That the auditor is not aware that these are opposing clients.
Uh,
Now, in law, There is something that is called ignorance is not an excuse. However, as an auditor, there is what we call audit documentation. You have an audit files. You have audit files. And it is expected that before an auditor takes up any engagement at all, there is what is called terms of reference, terms of engagement. You're supposed to discuss with the client, know the client business. Actually, when you get to professional, ISA 315, that's International Standard on Audit, which says that you need to understand the business client. So one of the requirement of ISA 315 is that you have to understand the client's entity such that you understand what they do, you understand who are the rivals, you understand what kind of product, you understand business to an extent that you will be able to tell who will be the opposing client. Let me give you an instance. Let me give you an instance. You know Nestle as a company, Nestle. Hello? Samuel, I'm
Yes,
asking now.
yes, I do, sir.
Yeah. In Nigeria, we have Nestle. Now,
Yes,
if I
sir.
ask you as a layman, who do you think is an opposing company to Nestle?
Uh, so I can say probably this the milk industry, like of picnic, in the
Ehen. So
trailer.
if you take Nestle, we have Freelance, we have Cadbury. These are all competitors in the industry. Or let me even give you a clear one, telecom industry. If you take
Yes, sir.
MTN, you know that
Yes,
Airtel will be an opposing
yes,
client. So what
yes,
that
sir.
opposition is actually saying is not like the two are in conflict. It just mean
Uh,
like competitors. So if you are going to be an auditor, and that's why you see that audit rotation is very important, even in the banking industry. Now, the fact that many companies might be using the same audit firm, what is very important is that the auditors must ensure that the people handling the work of this particular client are also not the people handling the work of the opposing client. It's very, very important. Otherwise, the auditor will be in trouble. So, why you see PwC, KPMG, why that they can be auditor for two banks at the same time? What they've done or what they are supposed to be doing or what we expect or what we believe they are doing is that the audit team for bank A is not the same as the audit team for bank B, because that is to ensure that there is no undue influence on the opinion of the auditor. Because if is open knowledge that this audit team are privy to the information of the other client, there might be issue of independence in appearance. So and I can as put it that I can don't even want you to take jobs for two opposing clients. But if you can prove that, there is enough segregation, what we call Chinese wall, that the team here are not interacting with the team there, then fine. But ideally, you're not supposed to have for two opposing clients. Is that clear? Is that clear, Samuel, before we go on? Okay. So let's look at objectivity. Now, I'm taking my time on all of this course so that by the time we get to future topics, we won't need to spend more time on it. Now, just like ICANN has done for the independence and set out some rules on independence, ICANN has also set out some rules for objectivity. This is to ensure the objectivity of the client of the accountant. Now, there are two major ways. The principle of objectivity helps the clients, the accountant rather, to be fair, such that the accountant can express his honest opinion free from conflict. When we say you are being objective in a case, what we are saying is that you are not biased. What we are saying is that you are honest. What we are saying is that you are fair. You are not swinging to the left. What we are saying is that there is no conflict of interest. So this principle of objectivity helps professional accountants, auditors to be objective and honest in their dealings. And to do that, I can now stated some of the ways that you can ensure your objectivity when you are dealing in profession, when you are undertaking professional dealings. Number one, because you are exposed to various situations that will bring pressures, what you are saying is that all these factors that will bring pressures to you, don't allow them. You must understand what will bring unnecessary pressure. Don't put yourself in a situation where there is undue pressure, because once there is pressure, your objectivity can be threatened. So what we're saying, don't put yourself under pressure or expose yourself to situations that will put pressure on you. So if you know that if I if I have close relationship with the management, they can exert unnecessary pressure. As an auditor, be very formal in your dealing with them. Don't put yourself in a situation where they can start putting unnecessary pressure. Then two, any relationship that will introduce bias, or any relationship that will make you to be to start being sentimental or sympathetic, don't be involved in it. Avoid it. Avoid it. Because once you put yourself in a situation, in any relationship that will make you to be sympathetic to the cause of the client, you cannot be objective any longer. So what we're saying here is that avoid relationship that will introduce bias, avoid situations that will put pressure, and ensure that discharge your professional duties very well. Do not accept gift, do not accept bribe, do not put your entertainment. There are some situations, maybe the client is offering you some souvenirs, and you know that this souvenir comes with a huge cost. You're not supposed to accept all such things. Any gift that is the amount, actually, in one of the rules, once the monetary value of the gift is substantial, you're not supposed to take it, because what it means is that you might be biased. The client might be expecting that I take care for a five-star restaurant, a five-course experience, and you are now coming at me with this report. It can lead to threat. It can lead to so many situations. So what we're saying is avoid all those areas. Areas that will put pressures, relationship that will introduce bias, accepting of gifts that will put you in a situation where your judgment is being impaired. Those are situations you need to avoid. And the same thing for integrity. It's very important that chartered accountants should be honest in all their dealings. In the report, you are supposed to be honest. The same thing for conflict of interest. Any situation that will pose conflict of interest. What do we mean by conflict of interest? Just like the opposing client, once you're an auditor for A and you're also an audit for B, and they are in the same business, it will start creating like, you might be biased. Or you are completing for a client and you need to pay incentive, you need to pay money to get the job. It will create conflict of interest. Or you have financial interest in a client, you've invested in that company and you are also the auditor. That's conflict of interest. So all of these situations, you need to avoid them. Now, even if you avoid all these situations, there are situations where the auditors still they are still faced with how will I say, they are faced with situation that they don't even have. They, not that they decide to put themselves into it, but because of one way or the other, these situations just come at them. We will look at that under the threats to independence. But before we look at threats to independence, I promise that we will look at confidentiality and what are those things that you might need to disclose under confidentiality. Now, we've said it that confidentiality means that the information that are gotten in the course of your professional engagement, your professional dealing with the client, You keep them, you don't disclose them anyhow. But we said, however, there are situations where you might need to disclose this information. Now, one of such areas that you might need to disclose this information are information that are required by law. Informations that are required by law. So there are some times that the law require you to disclose information. Now, what are those information? Now, let's just look at them. Let's look at situations where the law will require you to disclose. Now, the law requires to disclose when there are issues of money laundering. The law requires you to disclose when there are issues of terrorism financing. The law requires you to disclose when there are issues of human trafficking, when the proceed of the client is from corrupt practices. Now, these are areas that you have to disclose. Now, other than this area, there are some area also that the law permits you to disclose. Somebody mentioned it. You are the auditor, but you are now in a court of law, not to defend the client, but the client has been, maybe the client has an issue is court, and the government of the land is sub, they've charged you to court to come and say your piece, not to defend the client. Now, anytime the law permits you to require you to disclose other than money laundering, you need to inform the client that the law has called me to come and disclose such and such, and I'm based on the law, I'm required to disclose this information. So that's different from proceed of crime. I hope that is clear. If you have any question, you can also let me know. And just like we've stated under the independence and the objectivity, I can also state some rules for confidentiality to ensure that the confidentiality of the auditor is intact. So the rules that border on confidentiality are stated by ICANN. First is that one, you cannot disclose to a person outside the firm. If you come in contact with some information, you should not disclose it to anybody outside the audit firm, even if it's your wife. That's what confidentiality is saying. You keep that information unless the law require you to disclose, unless it's a professional duty to disclose. What do we mean by professional duty to disclose? Sometimes the professional regulatory body can call auditor that, oh, we want certain information on certain clients. That's a professional duty to disclose. Other than that, you are not supposed to disclose that information to any person. The second thing is that you are not supposed to use that information for your profit. Oh, I'm auditing this client and I discovered that they will soon launch a product tomorrow. And based on the information, anybody that purchased that product tomorrow will get so and so. You quickly go and buy it or use a proxy to buy it. No, you're not to use any confidential uh, any information for your own personal advantage or advantage of the third party. Is that clear? And you are also not to disclose it in any social gathering. You are supposed to be very careful with confidential information. Are we together? Any question? Any question? So if you get to the exam and you are asked under what circumstances should you disclose information gotten in at if client information gotten, you know that there are two or three situations. Disclosure permitted by law, but you need to inform the client and get approval from the client for that. Disclosure permitted by professional body. The regulatory body is asking you for information bordering on your client. You can disclose. Disclosure required by law. That's for illegality. The client is involved in illegal activities such as money laundering, tax evasion, human trafficking, terrorism financing. Under these three circumstances, you can disclose. But other than that, you're not supposed to disclose. And disclosure doesn't mean you are not telling third party. You are also not to use that information for your personal advantage or even your any third party advantage. You might say, I'm not using the information for myself, but I tell my friend to go and buy the share. No, it's not allowed. Actually, there is a name for that. It's called insider dealing or insider trading. Anytime you use privileged information to benefit yourself, that is called insider dealing or insider trading. And it's actually a crime. So you are not supposed to do that. Is that clear? Now, based on confidentiality that we've looked at, let's now go to the next subtopic, which is called threats to independence. Now, if you look at, I've talked so much about the independence of the auditor, why it's very important that auditors should be independent, not only independence of mind, they should also be independent in they should be seen to be independent, meaning that anything that will look like that will make them look like they are not independent should be done away with. Now, there are some things that would be like a threat to this independent. Now, this threat also affect the other five fundamental principles. So actually, we say there are threats to the five fundamental principles. Now, just like we have five fundamental principles, we also have five categories of threat that will affect this principle. These five categories of threat, you can find all other threats to independence, conflict of interest, objectivity, and all the likes under it. And what we are saying when we talk about threat, anything that will affect or make the professional contradict the five fundamental principles, or anything that will not make them to exhibit the five fundamental principles. For instance, you are an accountant. Anything that will not make you to be objective is a threat. Anything that will not make you to display your integrity or anything that will not make you to be honest is a threat. Anything that is affecting your professional competence is a threat. Anything that will make you want to disclose privileged information and is not based on the other disclosure reason is a threat. Anything that will make you put the profession in bad light or in disregard is a threat. So, what are these five threats or five categories of threat? Number one, the first category of threat is self interest threat. We'll look at it in detail. The second one is self review threat. Self review threat. The third one is intimidation threat, while the fourth one is advocacy threat. Then the fifth one is familiarity threat. Don't mind that I just call them differently. In your text, you will see them as self-interest, self-review, advocacy threat, familiarity threat, and intimidation threat. Whichever way you write it, they are all fine. Now let's look at what we mean by self-interest threat. I've said it that threats are anything that will affect you exhibiting the five fundamental principles or applying them. So any breach to the five fundamental principles is a threat. And the first one is self-interest threat. Now let me ask a question. When you hear the word self-interest threat, can anybody just tell me, explain in your own words, what you understand by self-interest threat? What do we mean by self-interest threat? Can everybody explain? Self-interest threat. Anybody? Sunday, can you try explain what we mean by self-interest? Just what in your own word, or let me ask, when you hear that they say somebody has self-interest, it's always you are too self-interested, or self-interest can mean like selfish. So if I say somebody is selfish, Sunday, what can you say about self-interest rate? Yeah, I'm listening.
Okay, so looking at that, I would say self interest threat is having let's say a personal gain, looking at what you want to benefit from a client company. That can
Okay,
stand as a threat to the professional, not a
thank you.
proper.
Thank you. Personal gain. When you are looking for what to gain from the client. That's good. That's good. Honora Emanuela, are you there? Honora Emanuela, don't leave the class because I'm calling your name now. Honora Emanuela, what if you are there?
Um,
Can you?
I think
Okay, Oluwafemi.
self-interest
Okay,
self-interest threat is a situation where an auditor's judgment can be influenced by their own financial interest or their other interests, just like Sunday has said. It's maybe
okay,
when like your personal interest is conflicting with your professional duty, something
okay,
like that.
okay. That's very nice. So now let me give you one key thing about self-interest, and that's what the examiner is looking for. Anytime you are writing on the categories of threat and you want to discuss self-interest threat, there is one key word that you must mention in the exam. You've all answered personal advantage, personal interest, you want to gain something from the client. Those are all fine. But there is one key word that the examiner is looking at, and which is what you must write down in the exam. That self-interest threat is whenever an auditor or an accountant has a financial interest in a client. You see that word financial interest is very, very key. So the fact that you want to take advantage of the client, maybe because this client is into production of, let's say, clothes, and you want him to give you clothes at the end of the day, is a self-interest, but that's not what we are looking at here. What we are looking at is that anytime an auditor, professional, an accountant has a financial interest in a client, then there is a self-interest threat. And what are these financial interests? It could be that an auditor has a shares in the client company. So an auditor wants to take an appointment, an engagement, and the client the auditor is a shareholder. That's a financial interest. That's what we're saying here. Or the auditor knows that, just like one of the points I said under rules of independence, that an auditor should not take up an engagement that the audit fee is predicated on the success of the engagement. So the client is saying that, I will give you this job, but if you do the work very well, I will pay you. But if you don't do it to my liking, I won't pay you. It means that your hand is twisted to the money. That's a financial interest. So if you look at your text, it says that chartered accountant in public practice, these are the threats: a financial interest in a client, or jointly holding a financial interest with a client. Maybe the client you are auditing, both of you have shares in a business. You both own a business. That's a financial, that's a self-interest threat. The other situation that can raise self-interest threat is undue dependence on the total fee from a client. I also said it under the rules of independence that the client should not be the major financier of the income of the auditor, such that the client fee is above 25% of is more than 25% of all the income you receive from all your clients. So undue dependence on total fee from a client, undue large proportion above 25%. So it means that the client is the one financing the audit firm. So once that situation is there, there is self-interest threat. So one thing I want you to take away from this is that self-interest threat has to do with financial interest. So once the auditor is having financial interest in the client, there is what is called self-interest threat. Is that clear? Now, the situation could also be that you don't want to lose the client. You know, if a client is the one paying larger proportion, you will be protecting the client. That's self-interest threat. Why are you protecting the client? Because of money. So self-interest threat usually has to do with financial interest in a client. So that's very key because if you are writing an exam, that's what the examiner wants to see. That self-interest is a threat to the auditor's objectivity arising from financial or other, you can now start saying other self-interest conflict. But you see that financial interest, you must mention it. If you don't mention the financial interest, you miss the mark here. So it could be that the client, the auditor has a loan from the client, or the auditor has given loan to the client. If you give loan to somebody, you want the person to pay back. So imagine you are auditing the person you're giving loan to. You will be protective of the person. So that's self-interest threat. I hope that is clear. Now, the second threat to this fundamental principle, and this is self-review threat. Self-review threat. Just like we said in the self-interest that anytime there is a financial interest, there is self-interest threat. Now, the self-review threat has to do with you reviewing your own work. What do we mean by this? I'm an accountant in company ABC. I'm probably the head of finance. I prepared the financial statement. The financial statement was prepared and signed off by me. And 2 or 3 months after preparing the financial statement, I resigned from the company and moved to an audit firm as maybe a partner in an audit firm. And the audit firm is now coming in as auditor to my former company. Now I'm the lead engagement partner and I will be reviewing the financial statement that was prepared by me. So self-review threats will happen anytime either an accountant is reviewing his previous work or you are reviewing a work that you was being prepared by you. So any product or judgment of a previous assurance engagement that needs to be re-evaluated, you are the one making judgment on your own work. It could be, for instance, you write this ICANN exam and you are now being given your script to be marked. You know, you've written the exam. You are also the the examiner. So that's the situation here. Anytime you have to review your own work and make and pass judgment on your own work, there's going to be self-review threat. So the situation could be a member of the assurance team that was previously a director and was in employment is now the one coming in as an auditor. That's what we call self-review threat. I hope it's clear. Self-review threat is saying that you are reviewing your previous assignment. That's what self-review threat is saying. That anytime you find yourself in a situation that the work you've done before, you are the one who is reviewing it. Because once you are to mark yourself, there is no how you can mark yourself down. Once you're supposed to, you are reviewing, it's just like this exam now. If I give, after the exam, if I give you your script to mark, how many of you will fail yourself? Eh? Let me ask, how many of you, if you score 49, you give yourself 49? Is there any person here? If there is any person, that person should just let me know now. So that we know that all of us. So self-review threat is very, very important. because it's also going to impact the objectivity of the auditor. So once you see those kind of situation, there's no how you will be seen to be independent. Even if you are in, if you did a very thorough job, nobody will believe that you are objective. Nobody will believe that you are honest. They say, you're not the one that did the work. So a self-review threat can happen, and the situations that it can happen have been stated in your test. So from self-review threat, let's now look at what other threat. Now there are examples of various self-review threats. A member of the assurance team, now you are now the director of the client. You were formerly with the client, you are now with the assurance team. You are in your company, you were, let's say at a point in time, you were a financial manager. You are the one who is doing a particular work. You were promoted to be the head of finance, or you're a former finance associate. You are now a finance manager. And the work you've done in the past, you now have to pass a review on it. There's no how you can mark yourself down. So that's self-review threat. Now, the next type of threat is what is called advocacy threat. Advocacy threat. Now, I said that an accountant, an auditor can be called to the court of law to come and state a case, to come and be a witness and state a case. That's required by law. Now, the advocacy threat is that an accountant should not be sympathetic to the cause of the client. An auditor should not be for or against a client's position, such that you should not defend or be opposing a client in a matter. For instance, you should not take a position where you are explaining the situation of the client that we can understand why this client is like this. Or you should not be in a position where you are condemning the client. So what the advocacy threat is saying is that the because once you are in that position, your objectivity is threatened. So you are not supposed to advocate, defend, or be against a client. You're not supposed to be like sympathetic to the client's cause. You are the auditor, but at the same time, you are having mercy for the client. So I can understand why your business is not moving. Maybe that's why your figure is low. Don't worry, don't worry. No, the accountant is supposed to be objective at all time. The auditor is supposed to be straightforward, honest at all time. You're not supposed to be sympathetic or be in a position where you are attacking the client. No. That's what advocacy threat is saying. Anytime you find yourself in that position, you can't be objective. For instance, a client is about to do initial public offer, or is about to be, there was a time banks were selling shares, I think late last year. As an auditor or as an accountant, a consultant, or what have you, you're not supposed to be helping them to promote their shares that buy the shares of social bank. I know them, they are my client. No, you're not supposed to advocate for the client. That's what we're saying. You're not supposed to market the client or help the client market their business. No. And the same way you are not supposed to market their business, you're also not supposed to demarket their business. You're supposed to take an unbiased umpire, meaning that you are neither for nor against the client. You are only objective. So advocacy threat is, you once you see yourself in that position, know that you've lost your objectivity. You've lost your objectivity. So these are what the advocacy threat is saying. Then the fourth one, which is the popular one, familiarity threat. What we mean by the familiarity threat? Familiarity threat can occur when you have close relationship. Maybe your family member is on the board of director of the client, or you've been the client auditor for a long time. Anytime you've been an auditor for a client for a long time, familiarity threat can set in. And once familiarity threat set in, you start becoming sympathetic to the client's cause. you now think, this client, I can understand what's happening. And as such, you must start finding yourself tending further to advocacy threat. You might not start defending the client. Familiarity threat can lead to advocacy threat. So familiarity threat is saying that the auditor should not, by reason of anything, have close relationship with client. You should not have a family member on the board of director. You should not be in a position where you develop long-standing relationship with the client to the point that you are now more or less like one with the client. So that familiarity threat calls for audit rotation. So anytime a member of the team is very close, or you have a family member in the client's company who can also wield significant control over you, your wife is the CFO and you are the lead engagement partner, there is a familiarity threat. Now don't forget, this threat we're also looking at it in terms of independence in appearance. An auditor can be objective, but once this threat is in place, his independence of mind might be intact. But what about independence in appearance? So that's what we are saying. It doesn't mean that the auditor is not being objective, but this situation poses threat to his objectivity. Because, take for instance, the self-interest threat. You have a financial interest in a client. You've invested in a client's company, and you are the auditor. No matter how much objective you are, people will say, "Oh, you want your own company to go down." So those are threats that will also threaten apart from the fact that it might not affect the independence of mind of the auditor, it has strong implication for independence in appearance. Now, quickly, let's look at the last threat. The last threat. The last threat is intimidation threat. Now, what intimidation threat is saying is that there are situations whereby auditor will face intimidation from the client just because you are doing your work, you are being objective, you are straightforward, you are displaying integrity, you don't have any you are competent, you ensure that you are abiding by the professional behavior. It doesn't mean that the client will not have issues with that. The client might want you to do otherwise, that, oh, don't report it like that now. And if you choose to go on, the client might threaten you. There might be intimidation that, oh, we will not pay your money, we will not pay the balance. If he's an accountant in a place of work, your boss or the management might say, we will fire you, you will lose your job. Or some might even say, we will not give you your bonus. So intimidation threats examples are, you might be threatened with dismissal. Oh, that will change the auditor. If you keep doing your work like this, you will not continue to be our auditor. You might be threatened with court action that, oh, you think you will just write and qualify our financial, you make us lose money because of the audit report. We will take you to court that you've not done a good job, that you were not thorough in your work. You can be threatened with court litigation. Then there can be pressure. You know what? If you They can put pressure that, oh, if you do it to our own the way we want it, we'll increase your audit fee. Well, we'll give you more bonus. And if not, we will not pay your money. So intimidation can come in various way. It can come in various way. Now, if you look at all these threats, some of them are not the making of the auditor. The auditor just find themselves in that position. So what should the auditor do? And quickly we will look at safeguards and procedures to this threat. So how is the auditor going to mitigate, reduce, or help himself against this threat? Okay, somebody has dropped a question on the chat. Now let's listen to the question whether okay. Sunday, how come I'm not seeing your question? Okay. Okay, I think okay. So the question, wow, is quite long. So your question states that I'm trying to read through your question. Okay. In a situation where you as a professional has heard about the shares of a company and have shown interest before the date it was made public. In a situation where, as a professional, you've heard about the shares of a company and have shown interest before the date it was made public, you were directed by your firm to go carry out your audit after. I'm trying to see what is written here. Uh, don't mind me. After you were directed by your company to carry out your audit, seeing that you have seen the event that is about to happen in some days to come, will that be looked at as taking advantage of your confidential information? Hmm. Now, you see, your question is very interesting. You've heard about the shares of a company, you've shown interest, probably you've purchased the company's share. Now, you were part of the audit team, and that was after you've even purchased the shares. Now you are now the auditor, and the shares is now probably increasing. Is that taking advantage of confidential information? Now, your question, if you look at your question very well, it also borders on self-interest threat. Self-interest threat. Now, self-interest threat doesn't mean that you just you just decide to have financial interest in a client. It might be before the audit engagement. Let's the scenario you've painted, you had information before you were the auditor, but now you are the auditor. Will it not be seen like you are using privileged information to purchase the shares? There is what is called disclosure. When you have a financial interest in a client, probably you have shares in a client, and you are now going to be the auditor, you need to disclose that I have shares in so company. So as such, you make the declaration of all the information beforehand so that people are aware that you purchase these shares before you become the auditor. That's first step. Then the second step, depending on how material the number of shares you have, you might need to withdraw from the engagement. That's the bitter truth. Because once you have substantial share in a client's company, whether before or after or during, as long as you are the auditor, there is no how your objectivity is not threatened. Independence in appearance is already threatened. So these threats are the what we are saying when we are talking about threat is that anything that will make a third party look at your work and doubt your work and question your work. So the fact that you have the shares before you become the auditor is immaterial. If the share is substantial, you must have disclosed in the course of audit engagement. I think the last lecture I took you guys on obtaining an engagement. There are some requirements to obtaining an audit engagement. Disclosure by both client and auditor. This is what we have, this is that, to avoid conflict of interest. Now, once that disclosure is being made, it will now be left by the audit firm senior partner to look at it. Is this thing material? Is it substantial? If it's substantial and material, you might need to be removed from the audit team. So, Sunday, does that answer your question? Please let me know if that answers your question.
Yes, sir. Yes.
Okay. If there is any other question, please feel free to ask or drop on the group. Now, having explained this threat, let me take the threat again. I said self-interest threat. That has to do with anytime there is a financial interest in a client. It could be shares, anything around money, it could be loan and all of that. Once that is in place, there is a threat. Self-review threat, when you have to review your previous work, whether you're in the company before or whether you're a director or you're now coming in as an auditor or you're in a lower position while you prepare the work, now you've been promoted and you want to pass judgment on your own work. That's self-review threat. Advocacy threat. You are not supposed to be defending or be against the client. You're not supposed to be advocating for the client, promoting the shares of the client. Once that exists, there is a threat. The other one, familiarity threat. You're not supposed to have too close relationship with the client that will threaten your work. Maybe there is a family member on the board of the client, or because you've been the auditor for over a while. The reason what this threat will do is that it will make you sympathetic to the cause of the client, and therefore your objectivity might be threatened. Then we look at intimidation threat. Anytime the auditor is being faced with intimidation from client, it could be threatened with loss, dismissal from the work, threat of court action, just to sway the auditor to the client's way. So the client wants you to do the work certain way, and you want to stand on your grounds of five fundamental principle of professional competence and objectivity, but the client is saying no. So the client can actually saying that it will be threatening you with court action, intimidations. Oh, I will remove you from being the auditor. I will not pay your money and the likes. So, what is the auditor going to do if the auditor is faced with any of these threats? Now, that leads us to what we call safeguards and procedure to the threats above. Now, these safeguards are more like, how will I say, they are more like ways of removing the threat, or ways to reduce the threat, or solutions to the threat. So safeguards are intended to eliminate or reduce the threat to acceptable level. Sometimes this safeguard will not remove the threat totally, but it will help to reduce the impact of the threat, or to even reduce it to a situation where it's acceptable. Take for instance financial interest of shares. You have shares in a company and the shares are substantial. Now maybe you might need to sell off some of the shares to reduce it to a level that is immaterial. That's a safeguard. So there are two major categories of safeguard. There is the safeguard prepared by the profession. These safeguards are prepared by profession. When I say profession, the audit profession has safeguard. This safeguard could also be safeguard prepared created by regulations. There are laws that have been put in place to help the auditors whenever they face threats. That's the first category of safeguard. Then there are also safeguard that has been put in place in the work environment. So you work in an audit firm, they will have put in place some measures such that when auditors face threats, what the auditors can do. So there are different audit firms that have different work safeguard. There are quality controls in place. There are trainings, enlightenment on what you should do. So sometimes the audit firm itself has put in some safeguards to help auditors and also the profession. So let's look at what are those safeguards that the professions have put in place that you as an auditor, as an accountant can just apply to any of the threats that we've listed above. Now, the first safeguard that the profession, when I say profession now, I'm referring to ICANN. I'm also referring to you being an auditor, what you're expected to do. There is what is called educational training and experience requirement. Now, the fact that you are going through this ICANN is more like an educational training to enlighten you on threats that you might see in the course of your work. So the profession has put in place educational training requirement, educational requirement. For you to act as an auditor, you must be a chartered accountant who is licensed to act as an auditor. That's a safeguard. Before you qualify, when you qualify, for you to say you are an auditor, external auditor now, you must have gone through the appropriate educational training. And in the course of going through this educational training, you will have been taught on what possible different scenarios you will face in the course of the work. You know that when people have understanding of situations that they face, they know how to act appropriately. When somebody don't know that this threat can be addressed, or somebody don't have understanding on what is even threat, the person will be confused. But once you have enlightenment, it's it's kinds of reduce the impact of the threat. So that's what educational requirements will do, and it's put in place by ICANN. That's why it's not everybody that is an auditor. It's not even all chartered accountants that are an auditor. So there are trainings. By the time you qualify, you'll be going for trainings either as an accountant, or there will be different paid training, free training. All this training is to create an enlightenment so that you know how to mitigate and address threats when you face them in the course of your work. Then the other one is what is called continued professional development. There are professional development programs that ICANNs have put in place for auditors. These are mandatory professional development programs that you have to go for, such that you have to do them before. If you don't do them over time, you can lose your license. The reason for this mandatory continuous professional development is also more like training to enlighten auditors, to teach them on what to do. So this is one of the safeguards that has been put in place by the profession. Now, the safeguard that has been put in place by legislation and regulation is also what is called professional standard and monitoring. Now, ICANN as a professional body monitors the work of auditors, and they go about ensuring that auditors apply appropriate standard in their work. So an auditor is not just an island. An auditor is not just all by himself. So ICANN is going around to monitor and also to help them on issues they face. So once you have any threats or you have any issue, you can always report to them or see them for counsel, and they will guide accordingly. So that's one of the safeguards that also been put in place. You are being taught on how to apply the standard. This even goes beyond the classroom. There will be visits if need be. ICANN can also do like a mediator between an auditors and a client. And there have been examples of this in real time. There is a case of an auditor when there are issues between two auditors and a client. They have to go to ICANN for mediation and for proper counseling and remediation of the action. So there is this monitoring activity carried out by the profession. Then the other one is that there is law on who can act as an auditor. Now the CAMA 2020 also empowers auditor and gives some independence requirement for the audit firm. So the auditor is also backed by law. So if an auditor is having issues as regards threat, the auditor has a legal recourse, can decide to take legal action to address the matter. He can seek for legal counsel that, take for instance the case of intimidation. An auditor might need to seek a legal advice on how to go about it. The case of sometimes an auditor needs to even get clarity on advocacy. For self-review, the accounting profession has what we call peer review. There is a way an audit firm can send the work they need to review to another firm to review for them. So if an auditor is faced with self-review threat, one of the ways to mitigate against it is to send the work to another colleague, another audit firm to review on their behalf rather than them reviewing their work. So external review of a firm's quality control by a legal empowered third party, peer review, professional review, all of these are ways that the professional help to mitigate against this threat. Now let's look at the safeguard that has been put in place by the work environment, what the audit firm should do to help auditors when auditors working. The other one was the profession, ICANN as a body. You as a body or as a member of ICANN, how you can apply this safeguard. Now, when you work, it is expected that audit firm as a management should put in some measures to mitigate against this threat. So number one, when the firm should have management that can approve appointment and engagement. What are we saying here? We talk about self-interest threat, we talk about familiarity threat. So before any engagement is approved or certified that we can take up a job, there should be a body of management that will review the engagement that, before in obtaining engagement, that was a topic for you guys treated last week. There should be a body that a part of management that will look at it that, this engagement, what are the likely issues we will face before we go ahead. When that is in place, they can decide which client and which to take, which client's appointment to take or not. And that will help auditors that they are not put in a position where they are facing unnecessary threat or loss of independence. It's because before you take up the client's work, you should have looked at the scenario very well. So there should be a way of reviewing appointment and engagement before taking them. The other one is that the audit firm should employ competent staff. They should develop their staff to such a point that they can make meaningful decision. So when you empower your staff, your audit staff to the point whereby they are enlightened, they can decide appropriately. They will be able to address these situations of threat even without unnecessary pressure. They will know what to do at the right time, know how to take appropriate decisions. So the audit firm should develop and employ appropriate staff. The next one is that there should be policy and procedures that guides the activities of auditors in relation to their clients. There should be documented policies and there should be procedures that emphasize fair dealings with clients. There should be internal procedures that will give auditors objectives on what to do, give them different choices on how to go about their engagement. Now, all of this will help the auditors in the course of their work and anytime they face threats. Anytime an auditor faces threat and he knows that these are the safeguards that have been put in place by the workplace, these are the safeguards that have been put in place by the profession, just applying any of these safeguards will mitigate the threat. It doesn't mean that the threat will go away totally. At least it will reduce the effect of the threat. So there are other safeguards. The other safeguards are like the rules of professional conduct for professional member from ICANN, how to apply this rule. Then there are ethical support from disciplinary committee. Then there is a way audit fee should be appropriated. There is a monitoring committee of ICANN who goes about visiting firm to have relationship with them. So with all of this safeguard, auditors can actually reduce or eliminate this threat. Any questions so far? We'll soon be through. We have about 30 minutes more, less than 30 minutes to round up the class. Now, I will go over it so that you can also still remember any points that we've shared during the beginning of this class. But before we start that, let's just quickly look at the last part for today, ethical conflict resolution. Now, you know that all we have been saying is that when auditors or accountants are dealing with clients or they are carrying out their activities, there are issues that they face. These issues sometimes can be very demanding. They comes with what we call ethical dilemma. Sometimes professional at loss at what to do. Should I take this action? Should I not take this action? Most of the threats are situation of what should I do? Should I declare that I have financial interest? Should I take this assignment? Should I withdraw from this engagement? The fundamental principle itself is a guide on how you should behave in these ethical situations. So most time, most of these ethical situations sometimes create what we call conflict. Take for instance, the client is in the case of intimidation, the client is saying, I'm not going to pay your fee. You say, I've rendered the service, you should pay my fee. So most of the time there could be conflict between the auditors and the client. So because of this conflict, and they are coming from the point of ethics, that this is the way the client is looking at it, this is the way I'm supposed to look at it as a professional. So because of that, this next topic is saying, how do accountants, how do auditor resolve conflict that arises as a result of ethical issues? So that's ethical conflict resolution. What are you supposed to do anytime you are faced with a situation whereby you need to take a decision? You have ethical dilemma. How do you resolve it? Or you have a conflict resolution that is as a result of ethical issues or is a threat. Sometimes some of this issue can be resolved when you apply these 5 steps. Now, these 5 steps of ethical resolution is more like a guide that anytime you are faced with ethical issues, applying these 5 steps will help you to understand the situation better. Now, when you are in an exam, you need to remember these 5 steps. I've said it over and over again that the audit exam is not an exam of what is, state is, this, that. You will be given a case scenario. You'll be given more like a case study text. They will paint a picture of a situation and the question will now go forth. How disease, what should have been done in that situation? Is this what are the fundamental rules that should have been applying? So you need to understand this concept to be able to apply them to the question that you are being asked. So no matter the conflict resolution that have been painted before you, these 5 steps is how you resolve it. And the first step in resolving any conflict of ethical nature is that, one, as an accountant, as an auditor, you need to get all the relevant facts of the matter. What do we mean? Anytime you have a situation that is bordering on ethical issues or there's an ethical dilemma, should I do this? Should I not do this? The first thing is to get all the facts of the matter. And the facts of the matter you are concerned with are relevant facts. For instance, if you say this is a self-interest threat, the matter you are looking for or the fact you are looking for is financial interest. So you need to get, what are the financial interests in this case? Oh, I have shares. Okay. What are the quantity of shares I have? These shares, is it totally for the client? Oh, am I the sole owner of this share? If I don't sell this share and I remain the auditor, what are the issues that will happen? You need to list out all the relevant facts. By the time you list out the relevant fact, you are halfway to the solution. So because most time when there are issues, people don't even know what's the fact of the matter. So what we are saying here is that get all the relevant facts of the matter. That's the first thing to resolving ethical conflict. Then the second thing, what is the ethical issue involved here? Oh, I'm in this situation. These are the facts of the matter. Oh, I have money here. What is the ethical issue involved? If I don't declare the financial interest, is that an ethical issue? Oh, it's an ethical issue because I'm the auditor. There will be independence in appearance. Independence of mind is threatened. That's ethical issue. Oh, if this client is the major the major source of our income as an audit firm, what's the ethical issue involved? It means that there might be conflict of interest. We might be seen to be dancing to the tune of the client. The client can decide to say, influence our direction. What is the ethical issue involved? You must be able to also identify the ethical issue involved. So the first thing is identify all relevant matter. Then if you've identified all the relevant matter, then you need to identify what are the ethical issue involved. So once you identify that, Then you can now go to the next step. You can now go to the next step. You can now go to the next step. Now, what is the next step? The next step is that after you've identified all relevant facts, the ethical issue involved, you now need to decide what fundamental principle is at play here, or what fundamental principle can I apply here. Is it the fundamental principle of integrity? Is it my am I being faced with issue of dishonest? Is this situation posting before me not to act straightforward, or is this issue saying that my independence is threatened, or is this issue of a breach of confidentiality? What is the fundamental principle at play here, or that is being threatened here? You've identified all the facts. You've said this is the ethical issue. Now, what fundamental principle should I apply, or is in question here? That's the third thing. You need to, and this fundamental principle is are those five that we discussed above. You need to identify that. Now, if you've done that, then you can now go to internal procedure, establish internal procedure. And what is that saying? What is the safeguard to apply? That's what that simply is saying. Do I need to apply the safeguard that has been provided by the profession? Do I need to apply the safeguard that has been put in place in my workplace in the audit firm? Do I need to apply the safeguard that has been put in place by the laws of the land that protect auditors? Once you've identified the safeguard to apply, then you can go to the last, alternative courses of action. So if I don't apply the safeguard, if I don't do, what action should I take? Based on all I've listed above, this is what I should do. Now, if I'm not going to take this action, should I resign? Should I continue? So these five steps are the standard way of resolving ethical conflict. We said number one, identify all relevant facts of the matter. Number two, what is the ethical issues involved? Number three, what is the fundamental principle at play here that I need to apply? Then three and four, what are the safeguards which in quote, what is the established internal procedures to apply? Then lastly, is there any alternative course of action I should take? Usually, the alternative course of action you should take if you can't apply it is to resign from the engagement. So when Alexa was saying at the beginning of the class that sometimes the auditor might need to walk away. Before an auditor walk away from an engagement, he needs to first look at all the steps we've mentioned above. And if you've done that, you can then decide that, oh, there is no other course for me than to resign from this engagement. And this is where we'll be calling it a day for this class. But before we go, I will take the summary of the whole topic again. I'll be fast and I want you to listen very well. Now, while I'm taking that, if there is any question, just quickly drop it on the group. Now, we started the class today, Professional Ethics and Code of Conduct, stating that there are two basic principles and two basic code of conduct. Number one, the principle-based ethics and the rule-based ethics. And we said that the rule-based ethics is a situation where there is a rule, specific rule for every specific situation that the accountant or the auditor will face. While the principle based just specify general principles that the accountant can apply in various situations. And we looked at the rule based and said that it has many limiting nature. One, because the various situations that the accountant will face are vast. There are different situations the accountant will face in the course of their work. And as such, there can be rules for all such situations because you don't even know some. The situations are very complex and can be varied. So because of this, We can't have rule for all that situation. Now, the other thing we say is that the rules might be limiting. Oh, an accountant in the rule say that accountant must behave like this. But when the situation really presents itself, the rule is not enough to address the situation. And because of all this limiting nature of the rule base, many professional bodies and accounting body all over, including the International Federations for Accountants, have adopted the principle-based code for accountants. And this principle-based code has five fundamental principles, which are integrity, objectivity, professional competence and due care, confidentiality, and professional behavior. These five fundamental principles helps the accountant to behave accordingly. We explain what integrity is, straightforward and be honest. Objectivity, no undue influence from any persons, not even the sentiment of the accountant in the course of doing their work. Professional competence, the accountant is developing his skills at appropriate level, in touch with current realities. Confidentiality, not disclosing or using privileged information for his own advantage or telling it to the third party. Professional behavior, complying with relevant laws and regulations and not putting the profession in disregard. Then we also go from there that there are major areas in the ICANN Code of Conduct: independence, objectivity, integrity, confidentiality, and conflict of interest. That these are the areas that I can pay attention so that the accountant and the auditor can behave accordingly. We look at independence and we say that independence of mind means that the auditor has a state of mind that is free from influence of any persons. He is able to express his professional judgment without any influence from any individual, and is able to act with integrity and be objective in his professional judgment. We also look at independence in appearance, and we say that this is any avoidance of fact or circumstances that will make a reasonable and informed third party, with all the knowledge of what the our auditor is doing, to think that the auditor's integrity has been compromised. So you can also look at the definition, but the important is that you understand it. Then, based on this independence, we now say that I can have some stated rules to help the independence of the auditor, ranging from not having beneficial interests in the client's equity, not collecting fee or gift that is substantial or fee that would be dependent on the success of the assignment. We also look at objectivity and the following the rules that are attached to it. Then we also look at conflict of interest, that the situation where the auditor is not in a position where his independence in appearance is threatened. And we also looked at confidentiality. When can the auditor disclose? What are those information the auditor can disclose? Then we looked at threats to independence. What are those things that will pose a threat to the independence of the auditor? We said that there are five major categories: self-interest, self-review, advocacy, familiarity, and intimidation threat. That all of this threat works to limit or impact the objectivity of the auditor, and that to remove all these threats, we have what we call safeguard. That these safeguards has been provided by the profession and also by the work environment. The one provided by the profession includes training, includes monitoring, while the one provided by work environment includes management approval for every engagement, the management having training as well, and employing competent staff, ensuring that there is adequate audit rotation, there is room for quality control. That all of these safeguards help to mitigate the threat that is being faced by the auditor. And lastly, we looked at the ethical conflict resolution. Now, there are five major ways to resolve any ethical issue: obtain the relevant fact of the matter. What are the relevant facts to this matter? What is the ethical issue that is being threatened, what's the fundamental principle that is in question, and what are the internal procedure, more like the safeguard that you can apply, and what is the last is what are the alternative course of action, which can be resigning from the engagement. From all of this, we are able to explain to a substantial level professional conduct and ethics, or professional ethics and code of conduct. Now, if there is no question, if there are further questions, you can still drop on the WhatsApp group. And I will advise that you also look for past questions that speaks to this particular topic. Now, when you see the past question, just like I've been saying, you will see that it has case study. Just go to the requirement, look at the question, and if you have any uh, you have issues, you can always reach on the WhatsApp group. So any question, that's where I will drop it for today.